The following is a presentation of TFNN. Live at TFNN, The Money Masters. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the August 7th, wonderful Wednesday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better Money Master and to provide you with tools that empower human potential. Because living up to our potential, well, that is something we must master each and every day. So let's begin with a few of our empowering beliefs. Here's an old Chinese proverb out there. It goes like this. It says, the best time to plant a tree was 20 years ago. The second best time, though, is now. That's right here, right now, today. Go plant a tree out there, folks, whatever that means to you. The next one coming from Stephen Covey. I love Stephen Covey. He passed away a while back. Stephen Covey from the Franklin Covey group, you know, those time management books. Some of you out there may remember those old time management books that we used to haul around just to make sure that we stayed on track with all of our things to do out there and the outcomes that we were trying to achieve. In fact, he has a paper, I know I have seen it on the internet. It's one you want to actually download. It's called something like There's Nothing Faster Than the Speed of Trust. Maybe it's just called Speed of Trust. Google that. There's a PDF version of it. You want to download that, put that away, give that to your kids out there, because there is nothing faster in life, folks, than the actual speed of trust out there. Anyways, he went on to say this: I am not a product of my circumstances. I am a product of my decisions. I love that. I love that quote. That's one you ought to write down and put on your computer screen as well. Let's go with a last one, an ancient Indian proverb that goes like this: certain things catch your eye, but pursue only those that capture your heart. Let's go capture the heart of the market here right now. We've got the Dow is off 84 points, trading out at 15,434. S&P trading down 10 at 1687. NASDAQ off 22 points at 3644. Russell 2000 down 7.5 points at 1044. NASDAQ 100 off 14 at 3107. New York Stock Exchange down 57 points at 95.57. The Philadelphia Gold and Silver Index is up about 1% here, up $1.10 this morning. Same thing with the HUI. That's up 1.5%. We've got gold. Goldilocks is up $2 and change. Silver back 8 cents right now. Light sweet crude up 7 pennies. Natural gas back 6 pennies. Our call-in number is 877-927-6648. Let's begin by taking a look at the S&P 500. Let's go see what the S&P 500 index is doing here as we speak. It is trading, I can tell you, it's trading at 1686. What is it trading into? Well, 1687.18. Today's going to be the day, because if you get it closed back below 1687.18, folks, then what you've got is a failure of a swing point, a significant swing point. May 22nd, you be back inside, or the S&P would be back inside the lower part of its range. That would go ahead and bring into play what? Yes, that's righty. That it brings into play June 24th out there, and that is a level at about 1560 to 1588. So today's going to be a very key session. You get it closed above 1687.18, you would have a rejection of a swing point, most likely on lighter volume out there. The other area to pay attention to on your stock chart is the actual trend that it got back above. Remember, it broke the trend line. This was the trend line. It's a shorter-term trend line. It's one coming off of November 16th, 2012. So your touch point out there is going to be that low, 1343.35. Your next touch point is going to be the low of December 31st. That was broken. It was broken with conviction here on June 20th. That's what led to those lower lows at June 24th area. So that is going to be, we got kind of a convergence, not to be mixed up with a convergence divergence indicator, but we have a convergence here of horizontal support and diagonal support out here, and that is in the S&P 500. So it has not really touched that area, but it's getting very close. 1687.18 is the key that you want to be watching. Let's, as long as we're in the indexes here, let's stay inside. Let's take a look at the Dow. The Dow itself yesterday gave up the ghost, came back inside, closed back inside 15,542.40. Right now traveling at 15,400. 430. So it is back inside the lower part of its range. The Dow has got volume down at June 24th out there. That price point is the 14,551 to 14,795. That is likely where it is headed to. It'll first run into, which it has not broken. So here's a trend line that you want to make sure you've also got on your screen, and that is coming off that same November 16th low. That's your touch point, 12,471. The next touch point is going to be December 31st out at 12,883. That happened to be the June 24th low. June 24th punched down into that area, and so we'll see if, in fact, that holds as a support. That is your diagonal support. Got quite a ways to go before it hits that area, but that is going to be the first place where we're going to get information from the Dow as to whether or not it's going to go all the way back down to that June 24th area. Your 0.618 retracement, 14,974. The first dead cat bounce area for the Dow would be 15,235. Somewhere in that range is where, if in fact we continue to see nothing but selling in the marketplace, that is where we will see the Dow move down into. Let's go to Lou in Nashua. Lou, thanks for calling. Thanks for holding. How are you today?
You.
Good. Sorry we couldn't get to you during the last hour, but thanks so much for calling back. We appreciate it. You wanted to take a look at the S&P futures contract. Is there a time frame that you're using on that?
No, it's just a day trade. But,
day trade, okay. So at the ES Mini here right now, it's trading at 1681 and a quarter, and there is still the potential for a bounce. I'm looking at a potential reversal pattern here, still in play, but it wouldn't be in play. I'd be paying attention to the 30-minute chart. I would be looking for a bullish candle to occur, and so at this stage here, with 17 minutes ago, that is certainly not the case out there. There's some other things that I take a look at, but I wouldn't step in front of it until I actually saw a bullish candle. And then what you would do is you would go ahead and you would put your stop somewhere underneath that, and you'd have to have a target on that. And the way to take a look at a target would be, taking a look at some retracement levels or other areas of resistance. In this case here, it's a set of swing points, and resistance area is most likely at about the 1695 area. So wherever it is that you would come in, you would be looking at a 1695 type range, but you can't do it until you see some type of bullish signal, and I would suggest being patient and waiting for that on the 30-minute chart to actually form out here, and that's not the case. So I don't know whether that is going to occur today or not. I know that it has the potential to do that. If I go back and take a look at the Euro-Japanese yen, it has the potential so long as this hammer candle that formed on the 120-minute chart here holds, and so far it has. And that was coming into 5 a.m. this morning after completing a perfect 1-to-1 A to B equals CD down. The Euro-Japanese yen got down to a price of 128.58, and then it formed a hammer candle. Then it was followed up by a nice wide-ranging bar, little bullish engulfing candle out there, and that's the reason why there is the potential for a bounce to ensue in the marketplace, in the S&P and the ES Mini out there. If the Euro-Yen closes underneath 128.54, then that game is over. Then that is not there. So to me, that's how you've got to correlate it, but I would not step in front of an ES Mini trade. I personally am waiting for a bullish engulfing, not a bullish candle, not necessarily bullish engulfing, but a bullish candle to take a potential bounce trade out there. So I'm just sitting on the sidelines waiting for that to occur. That's why I suggest that you would do the same.
I will. I got it all.
All righty?
Sure. Thank you.
And you bet. And thanks so much for calling back. Folks, it's so much easier to be able to identify a trade opportunity and then make sure you write down what that is, and then just simply sit there and wait and wait and wait. It's like going fishing. Wait for the trade to come to you. You don't have to chase after that trade. And if it doesn't happen, it doesn't happen. Not a big deal. There's always another trade that is going to be setting up somewhere. So we were talking about the Euro-Japanese yen. It completed a pattern out here this morning, coming into an area of support as well, and it made my favorite hammer candle, especially did it on a longer term time frame. That was the 120-minute chart. Now the low of that hammer wasn't tested. The actual low doesn't have to be tested. Yeah, it's a swing point, but it doesn't have to be tested, which is 128.54. Just so long as you don't get a close below it, and a close below it, we're in that 120-minute session now. That does not end till 11 o'clock. So the end of this show out here. So we've got the bullish candle configuration inside the Euro-Japanese yen that would allow me to go ahead and take a bounce trade. I'm also really looking to sell the market. So I'm just looking for a bounce, but the reward to risk inside the ES Mini may in fact, so far it has provided an opportunity to take a look at that trade. But you also have to always understand where are the areas that something could move to. In this case here, the first area of resistance is going to be 1690. So depending on where that bullish candle, if it were to occur, would form, that may not give you the proper reward to risk. And then you'd have to say, well, gave me what I wanted, but not enough on the reward to risk side. At this stage here, we do not have that in place. If we take a look at what the ES Mini has done thus far, though, and go back to that 30-minute chart, we come off of the lows out here from 11:30 in the morning on July 26th, all the way up to the highs that were put in at about coming into the close on Friday. You can see prices now dip below the 1683 mark, which was your 0.786. That says that most likely it's 1677 is the target here in the price range where it may find some support. That would also, let's take a look at A to B equals CD down patterns. That we would have inside here. If we take a look at our A point, we'll go ahead and use the swing point high at 11 a.m. on August the 5th. Your B point right down here at about 10:30 in the evening on December 7th. What we'll see is so far it's actually beyond a 1 to 2.618. A to B equals CD as price has really extended itself. You've got the old pie out there, 1 to 0.314. I think I've got that built in somewhere on one of my charts here, so give me a moment here to just find that. I probably could have just added it, but let me see if I've got it already built in. There we go, it's built in. So we've got 1 to pi is at the price level of 1679, 1680 out there. So it looks like that is where the ES Mini, just a couple points lower where it wants to trade to, and all the sellers may be out the door by 10:30 as the mad dash was out there. So I'm looking for the bounce here in order to be able to sell. I don't think you need to actually chase this thing on the way down. Take a look at selling the first bounce out here. You've also got relative strength indicator down towards that oversold condition. So it says, okay, could either bounce or could just simply move sideways out here. But anyway, that is on the ES Mini. Let's go back and take a look at the ETF structures out here. We'll take a look at the diamonds first. The diamonds here yesterday getting back below that May 22nd swing point. That number was 155.14. Did it on light volume, 3.5 million shares going against 12.7 million shares. Was not exactly a stellar day volume-wise, considering you made a high on August 2nd with 3.6 million shares, and that was certainly a light volume day. So the question is there going to be any volume to the downside? You've got the little blue squiggly lines on my screen out here. That's your 9-period and 18-period exponential moving average. So lagging indicators are actually still in bullish mode configuration. 877-927-6648. We'll be right back, folks.
With over 3 decades of commodity trading experience, Andy Hecht has developed a system that combines both technicals and fundamentals. He calls this approach Technomental, and now you can put it to work for yourself with his brand new service, the Technomental Commodity Report. In this weekly newsletter, which comes out each Thursday morning, Andy gives you his analysis of the market price direction bias using fundamentals, and then specific trade recommendations including entry and exit points using technicals. The recommendations in the newsletter are always based on stocks and ETFs, so a futures account is not required, and Andy will often use options in the recommendations as well. Andy will tell you where to get in, where to get out, and he'll outline the risk-reward profile for all recommendations. To get your month-long free trial to the Technomental Commodity Report by Andy Hecht while locking in the low introductory rate, visit the front page of TFNN.com today.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks, and let's go out to our favorite author, the next Robert Ludlum from Concord, Mass, to Mark, who's writing a cool book called The Spying Government. Mark, thanks for calling. Thanks for holding. How are you today?
I'm fine, Steve. How are you?
I'm doing great.
Thank you for the plug.
What's that?
Thank you for the plug.
Hey, no problem. I did begin reading the book. I don't have it all what you sent to me, but I did begin reading it.
Actually, I am just finishing up the proof, so I'm going to send you a new version of it. So
okay, all right, that'd be great.
I had planned to do that in probably tomorrow or Friday at the latest. As a matter of fact, that was one of the things I was going to tell you. Was
okay, cool.
I got it back from my editor, and I found so many little mistakes. I said, "Oh my God, I'm going to have to call that guy Steve down there and apologize. I gave him such a rough copy."
Stop! No, it's great. It's great. You're really you're very talented writer out there. So you wanted to take a look at the S&Ps.
I did, and I guess the same question goes for both the S&P and the Dow.
Yeah.
I'm watching both. I guess the Dow is a better question. The Dow is down 90-something points. Now it's down. Well, it's down 83. My question is this the beginning of the so-called bounce, or you think we're just going to sit here? And the second part of the question is it possible that we won't get this bounce, and we'll just go lower from here?
Well, it is. it is possible that we will not get a bounce. Now, what I would use as an indicator, well, the market always bounces. So the question is whether it's going to be a sideways bounce or it's going to be some other type of retracement out there. Now, one of the things that I think we need to really pay attention to, Mark, is the VIX index, which I've got up on my screen here. And right now it's at 1385. It's up about almost 9% out here. So if it closes up, same thing as yesterday, when the VIX gets a one-day rate of change of 10% or greater, there's about I forget the percentage, it's a high percent, 80-some-odd% chance of the following day being a bounce. Sometimes it's just an intraday bounce, but being a bounce. And the other 20% of the time when it doesn't happen, it's a 100% chance on the second day. Now, we're not there yet. It's only up about 9%. More important, though, than that is the blue squiggly line. That's the 50-day exponential moving average. And that right now is at 1424, and you're at 1385. So it's not exactly like it is far away. All significant damage in a market in a correction takes place when the VIX gets above the 50-day exponential moving average. So when that happens, if there has been no bounce, that's when you got to take a look at, say, okay, maybe I take a short position and just use a wider stop than you might normally do because that's when you really start to see some significant damage in the market. In fact, that's when I would take a look at any oversold condition on an intraday chart, just simply mostly working its way off on a sideways to shallow retracement. But until that happens, it says that there still is the potential here, for a bounce to take place. But there's a couple of things, that Euro-Japanese yen, that hammer candle gets taken out, and that says serious damage to the downside here. And you'd have to go take a look at the next levels there. So I pay attention to the VIX. I think, and I can pull this chart back, and you can see every time that the VIX gets above the 50-day exponential moving average, we see substantial damage to the market. It's going to turn. It turns at some point in time, but that's when you really start to see the serious retracements. And if I take this all the way back here into the time frame, if I go back into, as an example, July of 2011, and the S&P was right about 1343. As soon as that VIX got above that area, the S&P went from like about 1340-ish or so all the way down to the October 4th low out there at about 1098. So that's where some very serious damage will take place when that occurs, that 50-day exponential moving average. So that's not there yet, but it is something to be paying attention to. Now, inside the actual indexes, I think things to watch for, those trend lines, that's going to be important. The SPY is probably the one that's going, the S&P is the one that gives us that next piece of information. That trend line is, in essence, is being hit as we speak or is within a few points. So, 1687.18 is key. You get it close below that. Then you've got the S&P, so you got 500 in essence, which represents 500 stocks, and the Dow back into the lower part of its range out there. If you get a close below that trend line out there, that's significant too. So I think you just have to put a few things together like that. The New York Stock Exchange is the one that's been screaming for the past week and a day that the bears still have control of the market, so they haven't let up just yet. Does that help?
That does, Steve. Thank you so much, and I'm going to send you a new one probably tomorrow or the next day. Be on the lookout.
That sounds great. Okay, have a great morning,
soon,
Mark.
buddy. Bye-bye. Thank you.
You bet. Dow's off 85, S&P down 12. We'll be right back, folks.
With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can't use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. The Dow off 82 right now. The S&P is off 11. Let's go take a look at some of our core stocks out here, see what's going on. We'll start off with IBM. That's trading right now at 188.86, gapping down just a bit this morning. Yesterday's low was 190.27. The high today, 189.93. Volume yesterday on that move down. Light volume, 5.9 million shares going into 10 million shares, so didn't have enough energy. Now, it didn't test the lows out there, but just, gapping down, so that's big. That's important. Gapping down from the prior session. We've got a second gap in here. So far, volume during the first hour inside IBM is 1 million shares. Let's see how that actually compares to yesterday. Let's put this on a 30-minute chart. We'll take a look at the two 30-minute bars at the open from yesterday versus today. Yesterday at the open, big volume on that first bar. So, the first bar, 9:30 to 10, was 1.4 million shares, and then volume slowed down to 500,000 shares. So this did 1.4, so 1.9 million shares in the first hour of trading. Today, what we see in IBM is 649 the first 30 minutes and So 900,000 shares. So 900,000 versus yesterday almost 2 million shares. So, volume-wise, half of what we saw yesterday inside IBM. Something to think about. Let's put this back on the daily chart out here. So it doesn't seem like IBM's going to have enough volume it's going to test the swing point low, which is 188.41. See if it's already done that. It's gone down to, 188.34 is the low. Trading at 188.93 right now. Of course, it does have lower to go, and I'd like to see IBM actually get down to this area. I've been patiently waiting for IBM to get down back to the 182.30-ish type mark out there where it had a nice sign of a strength. Could be just a very nice consolidation range that IBM trades into. We'll see. But so far, volume-wise, trading into it light as we speak here at 10:36 a.m. Simon Property Group out here still struggling, trading lower, breaking that trend line that takes you back to 2009. Not a very bullish sight at all when you break that trend line. It does say that it'll eventually go back and try to get back inside the trend. That's where, if it rejects it, that's where it starts to look pretty poor for Simon Property Group. If it gets back inside there, then no big deal. It was a false break of that trend line. But Simon Property Group, I think the number... It's in the top 5 weighting structure of the IYR out there, so make sure if you're trading that, you're paying attention to Simon Property Group. Apple here, Apple not doing much today. It's trading at 463.61. Had really an inside day yesterday. Didn't do much yesterday as well. Apple is being held in check by its 200-period exponential moving average. That level right now is 468.25 out here. If it can get above that, then you'll see Apple move up into about the 504 type range out there. But first it has to clear and stay above that 200-period exponential moving average. Let's take a look here at Amazon, see what we have going on inside Amazon. Amazon here had a nice wide-ranging bar, nice sign of strength at the highs when that high has not been tested, 313.62. The low, which is 295.55, looks like that is been tested it hasn't been tested because the low so far, 296.50. So volume there is 8.8 million shares. That's a swing point on the way down here. It's coming down through that swing point on lighter volume. Has not been tested. A close below that area just sets up a normal retracement. Amazon did a 1 to 1.272. A to B equals C to up, but so far Amazon does not look bearish to me. A dead cat bounce brings it to 287.69 if it can close below 295.55. Let's see, what else do we have out here? How about Intel? Intel's got that hammer candle with that gap up, that hammer candle under pressure here this morning. The hammer candle low is 22.64 from July 10th. That had 50 million shares yesterday as it pulled back in there. Light volume, 28 million shares. Today so far, 6 million shares during the first hour, so we have seen volume pick up in Intel. It breaks the hammer candle, and that says that Intel should move down to the April 5th swing point area right around $20.90-ish as the level out here. So it would be important from the SOX index to see how Intel handles this low today. Again, the number you're paying attention to is 2264 and volume-wise 50 million shares. Let's see, what else do we have? Google. Let's take in a look at Google. Google right now is trading out at $80.90 out here. It's trading inside this high volume bar, which was from July the 19th. That is a low that actually wants to be tested out there, and that's 875.61. As it pushes back into that, it has been on light volume. Closed inside that bar yesterday with 1.5 million shares versus 7.3. I don't think so. So Google not showing a whole lot of weakness here. So far today, 400,000 shares. Even if you multiply that up, that becomes what, 2.5 million shares, something like that. So Google not showing that from an NDX standpoint. Google and IBM are not showing that they want to give up the ghost here just yet. Microsoft, that stock chart doesn't look so great anyways. No reason to take a look at that. ExxonMobil, large weighting inside the S&P 500, certainly inside the energy sector here. ExxonMobil got back inside its range ExxonMobil is going to get down to about 90.87. It has not exactly been selling off here. When you gap down into the $7 trading range that it was in, if you just take a look at the swing point low, its most recent one, which would, of course, be June 24th up to the high, that was put in on July 23rd. The 618 retracement, the normal level, and this is where ExxonMobil had actually broken out with 8.9 with 12 million shares. As it's pulled back in there, it's pulled back in with a lot of volume, but it has not been able to really bust down that breakout session. So 90.87 looks to be the next target inside of ExxonMobil. But the real target is most likely, because it broke back inside the trading range, is down around the $85 level out here. Let me see if there was anything else inside these core stocks we needed to take a look at. No, nothing that we need to take a look at. Let's go check out some of these equities that were out with earnings before the bell, after the bell last night. You've got First Solar, FSLR. That is trading back with some decent volume here this morning, gapping down, taking out a swing point from June 21st. That has 9 million shares, and it's already done 9 million shares today. So that's setting up a confirmed A to B equals CD up. On First Solar, let's take a look and see where those targets are. Your first target is about 33.05 to 27.98. That makes a lot of sense. Why? Because that's where First Solar last broke out. April the 9th is the trading session, anywhere from $26.76 to $37. So your 1 to 1.272 A to B equals CD will take you down towards the bottom of that range, 27.98. It's a 200-period exponential moving average. The green squiggly line is not that much further below where it's trading right now, which is about $39.26. So if it closes below that, the targets are 33.05, 27.98, maybe all the way back to 26.76 out there. That's on First Solar, FSLR. Marathon Oil this morning, a gap down, trading into the swing point from June 24th. That has 6 million shares. It's trading in there so far with 4 million shares. The low has not been tested. I suspect that it will be here, be tested. Let's take a look at Ralph Lauren out here. Ralph Lauren moving down with conviction this morning, gapping down to the price level. Well, it's right now trading out at 177. Volume behind the move, 1.4 million shares. It, too, wants to move down towards the June 24th level. That's going to be 170.30. It's going to have to make it through that 200-period exponential moving average, which is at about 171.03. So showing some signs of weakness here, and that is on Ralph Lauren. It makes for a potentially nice trade, though, because the breakout session here, the gap that has held, is the top of that February 5th candle, 165.15. That's the one I would put on my watch list out there on Ralph Lauren. If we take a look here at, what else? Disney. Let's go see what Disney is doing. They were out with numbers here, and Disney not trading too poorly. It did move down, did gap down this morning. Volume behind the move, 7.4 million shares, trading into the swing point from just a few days ago, July 30th. That only had 6 million shares out here, but so far so good. It doesn't look like a lot of damage inside of the Disney chart here whatsoever. Let's see, CHRW, C.H. Robinson, that is gapping down. That gap down with volume. That's got the June 24th level that it wants to trade into. Well, really the June 21st level in this case here wasn't a swing point, but was that high volume downdraft, the top of which is 55.73, and thus far has held 5.3 million shares down there. So far today, this has done 1.4 million shares. So it's got the volume, mathematically speaking, if we just go ahead and straight line it out, which would set up coming down and actually testing the June 24th level at about 53.74. That's on ticker symbol CHRW. What else do I have out here? Abercrombie. I want to take a look at that. First Solar, we did that. Zillow. So let's take a look at Zillow. Z is the ticker symbol out there. So we've got Zorro out here, and that has pulled back this morning after making a high. A couple trading sessions ago with 1.4 million shares on August the 5th. Pulled back so far this morning on 1.6 million shares, but that's not too well, it is not so good. This last broke out on August the 1st with only 1.3 million shares. What does that set up? That sets up maybe the June 28th level being tested. Wide volume, but not wide price spread on that day, June 28th. That level is 57.72 out there. And that was on Zillow. Z brought to us by Z in our Tiger's Den. Hey, let's go check out some of the commodity sector out here. Let's go from right to left. Let's check out natural gas. Let's go see what the continuous contract is doing. Looks miserable out here. No bullish candles. No reason to get in front on this trade unless you're trying to figure out if you could buy a bottom tick. Looks like the next move down is going to be into these swing points from February 15th, right around the 312, 319 area right now at about 3 1/4 out here, but not a bullish looking stock chart. It has moved into the oversold territory, so that is the positive. There should be some kind of bounce here. Last time it was in oversold territory was when it made a significant low back in April of 2012, April 19th. It tagged the area, and we saw a little bit of bounce June 11th. It tagged that area. We saw a little bit of a bounce on June 28th out there. Both of those were pretty tepid bounces out here. So natural gas, no bulls in sight yet. In bonds, let's go see what's going on inside the bond market here. Still trading with inside the candle session from July 5th. So from my look at it, not a whole lot out here. We're trading either to the upside or to the downside. You'd like to see the continuation of a move above or below that candle from July 5th. We take a look at light sweet crude, see what it is doing. Right now, you've got crude off about 28 cents, not a big deal. It is backing off just slightly, still traveling inside this August 1st candle. Right now down below the low of that 105.10. That would set up a pullback to at least 102.96 out here. I think light sweet crude still wants to, and you can see these small-bodied candles here. You got the nice wide body on the way up on August 1st and these small-bodied candles on the way down out here. If you get a close back above 105.10 today, it's at 105.03. You'll have a rejection of that area, and as soon as light sweet crude gets above 108.06, that'll send it off to the 114 level. Silver here this morning making a nice 0.618 retracement. So we have silver. 0.618 retracement level was 1909, and the actual price that it hit was 1910. It was 19098. So I would say we could round that to 1910, wouldn't you? So how about that? So you got it making its nice 0.618 retracement. That was coming off of the lows from June 28th all the way to the high that was put in on July 23rd out there. So it's made its 0.618 retracement right now. That is a hammer candle that has formed in silver. So that would be if it finished that way, I would like to see that, and then some follow through tomorrow, and then we will have seen the A to B equals CD up that could be forming here inside of silver. What does that look like? I am glad you asked me that question. That A to B equals CD up would look something like this, and would say that silver could be on its way into the $22 mark, 21.40.93 out there. So you got a little hammer candle that has formed as of 10:48 in the morning. Still a lot of time left in the trading session. Goldilocks here. Gold moved down below its 0.382 level, but maybe it was a little sympathy play with regard to silver as it was getting a little bit more hammered this morning, not because it was out drinking late last night, but just simply forming that hammer candle. Silver, in the case of gold, you'd like to see it get back above the 1285 mark out here. What you'd really like to see is a close above 1306.40. If that were to occur today, tomorrow, then gold would be off to the moon. The moon here, the moonshot inside gold would take you up to a price level. That's if, in fact, you got that close here today or tomorrow, up to the 1438, 1483 mark inside the gold. We're taking a look at the continuous contract right now. Let's peek around the world here. Let's go take a look at the damage, the carnage that was done. Let's take a look at the DAX. The DAX here having just trading the DAX is confused, isn't sure what to do. We got a little doji candle out here as we speak. It is lower than yesterday, and this does have a 0.786 Gartley sell pattern that is still in play out here. The first bounce is going to be to the 0.382 or 8137. 79.53 would likely be a target. But how about that Nikkei? Down 4% here last night, but we'll see if this is still going to be an A to B equals CD up. The Nikkei. We'll be right back, folks.
patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi. I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Let's do a recap here of the markets, what it is that we're taking a look at 10:54 a.m. So as we speak right now, we're going to start off by taking a look here at the New York Stock Exchange chart out here. The bears have been in control of the market, at least New York Stock Exchange, ever since last Monday. I believe that was July the 29th out there. They've been in charge. How do I know that? Well, just simply the McClellan Summation Index has been pointed down down, the oscillator being below zero. That is where you see either sideways or correction moves begin to take place. We saw a little bit of a drift higher. Thought that the New York Stock Exchange would at least test the May 22nd high, but no, that was 96.95.46. It got up to 96.90, 4 points shy of that. We saw a nice move down inside the net advancing, net declining actually issues yesterday. So we see a nice move back down. We're looking at what looks to me like similar structures at the highs. Now the question is going to be the two most recent highs out here in the summation inside the oscillator. We're going to see if we're going to see a similar type of response here while it is below zero as well. Now, is there a possibility that the bulls could take over the market today? Yes, they would need 2,258 issues. Not likely to take place, and more likely to say that the bears really are now really getting a firm hold and firm grip on the market. Are there places where the market could bounce to? Absolutely. And what should when the oscillator is below zero, the summation index is pointing down, which side of the trade should you always be looking for? That's right, the short side. So you should be looking for places to enter. So now let's go take a look at where those might be. Let's go take a look at the ES mini. Let's take a look at the 30-minute chart. If, in fact, as we come into the 11 o'clock session, so we've got 4 minutes from now, if, in fact, you were to get a close at or above 1684 and you're at 1683.50 right now, you would have the first sign of bulls showing up for work. That would be a bullish engulfing candle out there, and I would say, okay, that's what would set up a bounce. Where would the bounce take us to? Well, the dead cat bounce is a 0.382 retracement. That would be 1689. That's about another 6 points higher from where we're at. That's the last set of swing points. That would be the normal bounce that would take place. Does it have to be a bullish engulfing that takes place in the next 3.5 minutes out there? No, but if you did get that, that would increase the likelihood and the chances that that would take place. The normal bounce is up to 1695. So if it gets up to 1695, what you should do is thank your lucky stars, because that would be a nice place to come in from a short position, and that is taking a look at the S&P futures. We'll see if, in fact, that takes place. What else do we pay attention to on the daily chart of the S&P futures? At 1685.75, you're at 1683.50. You close back above that, you've got a rejection of a swing point on lighter volume. That says that, okay, that secondary, that 0.618 bounce that I just gave you would be, or would likely unfold, that can happen in the overnight hours, obviously, or early morning tomorrow. Likewise, on the index, what are we taking a look at here on the actual cash S&P? We're taking a look at price now having moved down into both diagonal and horizontal resistance, which is 1687.18. It's at 1687.55. A close above 1687.18, you will have rejected that May 22nd swing point on lighter volume. That would say, okay, you could get a nice bounce. So you want to go ahead and take advantage of that possible bounce. I don't, whether you got the cojones to go ahead and play it, make sure you're using the appropriate stops, you're using the right money management strategy, but your better trade is to be patient and wait to see if that bounce unfolds, then jump onto the short side of the train out there. What you would also want to be paying attention to is monitoring the euro Japanese yen. At this stage here, the hammer candle has been tested. This is what indicates additionally that the bounce, in fact, could unfold. Stay tuned, folks. Basil Chapman is up next. And remember this, the way you do anything is absolutely the way you do everything. Become a pioneer of your future versus a prisoner of your past. Have a great Wednesday, folks. Look forward to seeing you in the morning.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.